Well, hello, Mavericks. How's it going? This is Rob Reinhold, and here we are right before the US Payrolls Report for August 2022. All right, so let's jump into what the expectations are. Expectations are that job growth is going to slow a little bit, but still strong in the coming months. Specifically speaking, let's take a look at today. Today we are looking for estimates of right around 250,000. I've seen 250, 258, somewhere in that area that we're going to be looking for. This is the expectation here. This is going to be a pretty interesting jobs report because typically it's a binary reaction. Either the report is good or it's bad. And I think this one is a little different because let's think about where we are right here with the Fed. The Fed has been raising rates aggressively, and the market's been worried every time the Fed is more hawkish, equities go down, the dollar goes up, and then when all of a sudden when the equities go the other way, it's because the Fed, they think, okay, maybe the Fed isn't going to be as aggressive. So we have this this push and pull between the market and the Fed. And usually, again, it's a binary thing. It's either rates are going much higher than the market thinks, and that's bad for equities, good for dollar, or vice versa. Rates aren't going to go up as much, and that's bad for dollar, good for equities. This report, I think, is there's going to be a right and two wrongs. And what I mean by that is I think the market wants a number just like this. Remember, if this number is too weak, it means the economy is slowing significantly and maybe we're going into recession, and that's bad for equities. If this number is really good, let's say this number comes out at 350,000, 400,000. All of a sudden, what that means is that the Fed is going to be more aggressive in rates than the market currently thinks, which is bad for equities. So you've got these two possibilities. A very weak jobs report, bad for equities. A very strong report, potentially bad for equities because of the Fed. I think there's an area that the market really wants to see this come in as. And I think anywhere from like 180,000 jobs up to about 300,000 jobs. I think that is going to be the sweet spot. And I think if we get it in that area, I think that equities really like that number. And I think it's fairly neutral for the dollar. I think it doesn't really matter much for the dollar. It's been priced in for that. So let's talk about getting ready for this report, because we're going to be trading this report live when it comes out. And there's three ways to trade news. You can trade before the news comes out, which is the most reward and the most amount of risk. We'll talk about that here in a second. You can enter on the news. So basically you build your orders before the report, but then you have your order sitting out there. So if there is a move, then you do grab that trade. We'll talk about the risks of that one here in a second. And then there is the second stage entry. This is where you let the news come and go, let the craziness go away, and then you take a look at the charts and you say, okay, these are good entry points on charts. Again, this is the safest way, but also the least amount of reward. So let's talk about the big risk here, slippage. Slippage is a huge risk, and this is why getting in before the report has the most risk, because you could put your orders out there, you could get into a position, put a stop order out there, and when the market moves so fast, you don't get your guaranteed stop order. Remember, when your stop orders hit, it gets you in line. That's all it does. Hey, I want to, if this thing goes above 183.10, I want to buy it. I want to get out of my short. Well, you got to get in line at 183.10. You get filled when you get to the front of the line. That might be at 183.40. 183.50. There's slippage here. So we really have to worry about slippage, and we also have to worry about the whipsaw. And this is the one I think is going to happen today, the whipsaw. What happens is, again, let's say someone goes long, and you can see, look at this candle here. This big, huge candle. This stops everyone out. So if someone gets in and they say, I'm going to put in a stop, they're out. They took a loss. If someone went short and they put a stop order up here, they got triggered. As you can see here, both sides, both longs and shorts got triggered here. They took losses. And it wasn't because the trade was bad, it went against them. It's because the volatility was so great during that period that it moved outside of their stop order, and so it caused them to take a loss. So let's talk about this report. Which one are we going to use, or at least which one am I going to use I do think there is going to be a whipsaw here. And so whenever there's a whipsaw, I don't want to be in before and I don't want to be on. I want to be in the second stage. So what we're going to do is we're going to take a look at the currencies, find the currency pairs we're going to trade, and we're going to let this craziness go for the first minute, 2 minutes, 3 minutes. And then we're going to throw out some orders out there and see if we can get triggered. So let's jump into the market right here. And first off, let me just take a look at equities. Equities are basically flat. NASDAQ flat, S&P up a tiny bit, Russell up a tiny bit. So equities are really flat going into this, and you can see we're high basing here on a short-term basis. But here's the 1 hour chart, and you can see not really going anywhere. So what we want to do is I want to find the currency that is moving the fastest here with the most amount of velocity. So I'm going to be taking a look at our velocity score. We are going to be using a 13 EMA. We're going to be using a Parabolic Sar, and we are also going to be using an RSI. What we're going to find is, okay, which currency is the most current velocity and which one is going to be the best trade. Let's start off with the dollar because the dollar is the one that's going to be the most affected by this news. And we are going to be trading a dollar pair. We know that for a fact. So we have to take a look at where dollar is. So dollar had a big run back here, pull back, run to a new high, pull back, base, pull back to a new high. So we're coming down into this support area, somewhere like in this 119 area. This is our currency basket. This isn't any exact pair, but this is our basket. So in this range here, we got some support and resistance. So the question is the dollar going to resume its uptrend, bounce and go higher, or go lower? And of course, we don't know the answer to that. That's why we're looking at charts. That's why we're going to be making some projections here. But you have to admit that right here, right now, it's mixed on the dollar. We have an EMA that's still going down a little bit. We have a Parabolic Sar, though, that has been pierced to the upside, which is a bullish signal. We have an RSI down here that is at 45. That's so neutral. So there's not a real great call on dollar here for me. We got one saying it's going lower, one saying it's going higher, and one saying it's neutral. So let's jump over here to yen. All right, yen you can see is strong here. So if you want to be short dollar, I think yen is a good pairing. Take a look at Swiss franc, and you can see that is as sideways as it could be. Take a look at euro. Euro is, sideways short term, but still moving lower. So I do like euro on the short side against a long dollar trade here. Pound is flat, short term. CAD is flat to slightly weak, but I'm going to call that more of a flat with that Parabolic Sar. Aussie dollar, again, everything here is pretty flat. Let me look at the Kiwi. Fairly flat, but Kiwi, you can see here we've got a break of a Parabolic Sar. We're starting to get some steepness in this RSI. So my pairs that I really like here, I like dollar against a dollar long trade. If I want to be long dollar, I like it against the euro. A dollar short trade here, I like it against the yen, number one, and the Kiwi. So let's take a look at those pairs and start to build out some trades. So here we have dollar yen. You can see here the momentum on the dollar yen here is just not going anywhere. Now here's the problem. That's where the market is right now. The entire market is basically flat. Yesterday was basically a flat day in equities. So we're seeing a lot of flatness in these markets. But if you take a look at dollar yen, let's take a look at this range here that we've seen here. And really start to look at, okay, where do we want to take a look at dollar yen? Now remember, I'm looking at this pairing for a short dollar potential trade. Now I'm going to be looking at both a short and a long dollar trade here. So I do like this. So the question is, where are some entry points here? So for me, on a short, if you want to be very aggressive, 132.50 could be a definite possibility. That is actually going to be my point here. 132.50 on dollar yen. So what I'm going to do is I'm going to go over and just get orders ready. This is what I like to do. I like to go over. Oh, we already have the jobs report out. I've been talking too long. I apologize. Okay, so we've got strong dollar. Got strong dollar. So remember, we wanted to play euro. Euro against dollar here. Let's take a look at, again, the possible entry points we're looking at. We wanted to have, we expect there to be some support right in this area. And then down here, we've got a little bit more support down here. And then ultimately, we've got some support down here at 101.30. So these were going to be the points we're going to be taking a look at. Let's take a look at what the numbers actually were. We've got 528. Holy cow, 528. That is a big move. Big move here. So that is definitely much stronger than expected. So we've got, yep, and sure enough, we've got equities tanking. We've got equities tanking at the moment, dollar surging. All right, so this is the point where we have to determine, okay, we had our trade, we identified if it's a long dollar, we want to be short euro. And now it's just a matter of setting up entry points. We have the initial move to the downside in euro dollar. The big question is there going to be any follow through? And this is where we really like the second stage entry, is where we can go in and say, okay, we want to get in if there is follow through. So we'd love to identify the first points. The first points of this, the first couple minutes after the report, we can identify, okay, this is the extreme movement on the first 2 or 3 minutes. And if it goes below that point, it means there's follow through. It means there's follow through. So I'm going to set up these orders here. And I do definitely like this one here as far as an entry point. And I'm just going to be putting out, I've got to build a stop limit order. Sorry, we didn't really even have time to discuss stop limit orders, so. All right. So I'm going to go ahead and transmit this order. So it's an entry to be short euro dollar at 1017. And that got filled. Again, we had follow through the low of the first couple minutes. And I have a stop up there at 102.40. So 102.40 is the stop on this one. Now again, on any trade we have to talk about position management. We have taken a position. We have no idea if it's going to go our way. We did, some research. We took a look at it. We could have done 2 hours of research. It's still not going to change the fact that we don't know if it's going to go our way or not. So we have to figure out a way. How do we get out if it goes against us as fast as we can and stay in it as long as we can stay in it if it goes the way we want it to? And this is where we talk about tying your stop orders to indicators, moving averages. So I'm going to be taking a look at using this moving average. 13-period moving average is a very tight. This is a very tight stop. The next one is going to be using Parabolic Sar. That's going to be the next tighter stop. And I'm going to be, again, I've already got my initial stop up here at 102.40. That's where my initial stop is. So again, if you want to be really short term, I would say use the 13-period EMA. I don't want to be that short term. It's just not how I trade. I'm going to be using the Parabolic Sar, which is these dots up above. So the Parabolic Sar, once these Parabolic Sars start to get below my initial stop, I'm going to start using these to lower my stop down. So basically the trade is going to be, I'm going to be short as long as the Parabolic Sars don't get pierced. And if you took a look at using the Parabolic Sars back here, let's say you took a long on this candle, and then once the Parabolic Sars got above your stop, you would just simply move your stop up. Every time you got a new Parabolic Sar, you'd move your stop up, and you can see this trade was stopped out on this candle right here. So again, how do you get in, get out if you're wrong? How do you stay in as long as you can if you're right? This is the way to do it here. Okay, so we've got euro dollar short. Checking back in again, equities continue to fall. Equities now down about 0.75% on the S&P, 1% on the NASDAQ. Much stronger than expected. So with a 528,000 jobs, that is substantially more than expected. By the way, wages are also much stronger than expected, up 0.5%. That is a hot inflationary number. Unemployment rate dropped to 3.5%. So all three numbers beat expectations as far as way better than expected. This is definitely going to put some pressure on the Fed to continue to raise interest rates. We'll have to see what happens because the market has made a big bet, at least the equity market has made a big bet, that inflation is coming down and that the Fed's going to be able to back off. And it looks like with this number, that is just not the case. We'll see what the equities markets can do to shake this off, but I think this is the worst case scenario for this report here. All right, if you guys have any questions, please let me know. And I'm sorry, I actually dilly-dallied a little bit too much in the beginning and didn't get the full analysis going into the report. But I'll do much better next time. You think I'd have this down after 25 years, but and not just 25 years, but boy, we've been meeting live as a firm around these reports since 2009. So it's been 13 years, times 12. I've got roughly 158 of these under my belt. So you think I'd be a little bit better at it. All right, dollar CAD. Let's take a look at dollar CAD. Got a couple people that have caught dollar CAD. And that was the other trade I did like. I liked CAD on the short side as well. So yeah, this one looks good. Looks great. Nice breakout. I mean, look at that breakout of this high base. We've been basing now for 4 days and a breakout. Yeah, this trade looks fantastic. This trade looks really good. So I always ask the question, okay, I chose Euro, someone else chose CAD. Which one was better? Well, all we do is we have to pair those up. And you can see that the Euro has been a little weaker than the CAD off this report. So, but again, look, this is a dollar play. What you pair it against, it's not going to matter. It's not going to determine whether or not you were right or wrong on the trade. It's going to determine how much you made if it does go our way. So I think those are both really good trades here overall. Dollar yen. Let's take a look at dollar yen. Again, I didn't love dollar yen because of the yen was strong, and I wanted to, again, this is long dollar. So long dollar against a stronger currency, which was yen at the moment. But as you can see here, it's actually up nicely, and frankly, maybe this is the biggest winner of them all. Again, let's throw up euro yen. Euro's a little bit stronger than yen here. So great job on dollar yen. I like this one as well. As you can see here, nice move higher. We're hitting up against some resistance here, but overall, a really nice move. So again, this is a dollar trade. This is pairing it against something else. We're just now pairing it up to determine how much we make. Are we going to make 0.7%? Are we going to make 0.6? Again, it's whatever you paired it up against is going to determine whether you made, the most amount you could or just a moderate amount. On a stop, it's the same. If the trade goes against you, you're going to take losses across the board if you're using correct charting and position management strategies. All right, but let's go quickly back to euro dollar. And the big question is there going to be that second stage, that second follow through where it just says, hey, you know what? We're piercing through it. There's a lot more trades, a lot more money behind this. And we just don't know. We just don't know. And so that's why we use our trailing stops to follow it down continuously. Got a question here from one of our traders. Says, okay, hey, Rob, can a second stage entry be about an hour as well? Yes. So really all the second stage entry is saying is that you want to play the news. And the fact that you want to play the news means there's a moment in time where you're expecting there to be a change in trend or an extended move for a period of time. Yeah, you could absolutely enter that an hour after because you're saying, hey, I think this news has enough power to push it up or down in one direction, and I can build a trade around that. With this report, with payroll's report, with it being on a Friday, that would mean that you are basically looking at it over the weekend holding, which some people like, some people don't. If you want it to be shorter term, I think an hour after is probably a little bit too late. If you're looking to say, I want to get in and out within an hour or two, but I'm not going to get in until 2 hours later, all of a sudden, now you've got this really tight window of when the market closes at 5 p.m. Eastern time. You may not have enough time to make that trade. That's the only thing I can think of in this situation. But if it was any other news report, like RBA that we had on Monday night, absolutely. You've got a lot of time to let that trade develop over the week if you didn't want to do an over the weekend holding. Great question, though. But really, it's just a matter of, are you playing the news? If you're not playing the news, then no. If you're saying, hey, I'm going to look at, other pairs, euro, Swiss franc, that's a totally different trade off the news. It's not even about the payroll's report. It's just a regular trade. So you would just make that as a regular trade. Question is that pound yen, thanks Melanie, pound yen seems to be affected of this as well. The reason is that if you have listened to me over the last week, I've talked about how negatively correlated dollar yen right now is. So we've seen how dollar yen are very negatively correlated at the moment. And let me just pull up dollar yen and just show you, how big of swings we've actually seen here. Dollar yen has been the biggest percentage mover all week. So we started here at 137, came all the way down here to 130. That's just an enormous move. And then from 130, we came up to 134. I mean, that's a 3% move. So we had like a 6% move to the downside, a 3% move to the upside. And so right now, dollar yen are negatively correlated. So what that means is whatever happens to one, the other is going to react the other way. So the fact that dollar is strong here, it's putting some downward pressure on the yen. And you can see that everything is up against the yen. The yen is the weakest currency after the report. So that's why it's affecting it, just because of the negative correlation that it has with the dollar at the moment. It is going to be muted. It's not going to be, if you were in, pound dollar, it would be a much bigger movement against you. But yeah, yen is likely, if the dollar stays strong, that yen that is negatively correlated right now, I wouldn't be surprised to see that yen continue to weaken. And remember, the yen is also a little bit of a currency that people like when economic news is poor. And that jobs report was actually quite a good number. So that could also affect yen a little bit. But again, like I said, I expect this to be a muted effect on yen. Yes, we got some movement here. That's more than some movement. We got about a 0.8% move on the downside or on the upside on. Oh, sorry, this is dollar yen. What am I doing? Okay, back to pound yen. All right, so we've moved from 160, 170 to 162. That's about a 0.4% move is what that's done. So we've had dollar that's moved 1.2% versus the yen. Again, we're just seeing that yen weaken a little bit because of that. All right, well, again, for those of you that jump into your trades, and again, and I hate to say, I actually love to say this. I love to say this. For those of you that are in trades, guess what? You're either going to make money or you're not. And I know that sounds not too smart. Like, oh, this guy's been doing this for this long, and that's his analysis. And yeah, that is my analysis. That's how trading works. You do your work, you build your trade, you get in, and you watch. And, well, you don't need to watch. Don't screen watch. It's never brings anything good. But we took the position, and we don't know what the outcome is going to be. But what we do know is that we want to lose as little as we can if we're wrong. At this moment, it does not look like we're wrong. The price is not moving against us. The price is actually moving for us. So now the question is, okay, when do I get out and how do I get out? Basically, the answer is as long as this trade is going for us, we want to stay in it. As long as it's going for us. And so you just have to quantify what for us is at the moment. And so I like to use things like, an EMA. As long as the EMA is sloping downward, it's working our way. As long as it's trading below this Parabolic Sar, it's going our way. So when you tie the trailing stop to these things, all of a sudden it doesn't become a emotional decision. It doesn't become a decision you make at all. The market makes a decision for you. So just follow your rules, follow your system, and we could have a really good trade on our hands. I think that jobs report was absolutely a blowout number, and exactly what I thought would happen is happening. We are getting negative moves in equities and very strong moves in the dollar. So I think this could be a really good trade. I know I'm not going to hold over the weekend, so I will be out of this by the end of the day and take whatever pips I've got. Thank you so much for joining me, everyone. Take care. Have a great weekend. Goodbye.